What the heck is going on with the Denver metro real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group, and each and every month we bring you the latest in the Denver metro real estate market. We call it Market in a Minute. Heads up, we're going to take more than a minute. Bear with us though, we're going to go over some key vital signs of the real estate market, how they compare month over month, year over year. We're going to take a look at some trend lines so that if you are entering the market, plan on entering the market, already in the market, to buy a home, sell a home, or do both at the same time, you can use these stats to your advantage to accomplish your real estate goals. So let's get right into it. We're looking at month over month in these 9 key metrics and color coding. Let's get into that. If it's shaded in red, that metric is moving in favor of buyers. If it's shaded in green, it's moving in favor of sellers. Now, whole heck of a lot of red on the screen, as you might imagine if you follow the real estate market at all. Let's talk about some of the biggest movers of the month of July 2025, and it's how long it actually takes for a home to sell. Both average and median days on market are up for the 3rd straight month, making some big moves again. Median rising by 26%, average days on market rising by 17%. So on average, it's taken 49 days to go from a debut of a listing to contract. Median, it's 34 days. Also moving in favor of buyers, new purchase contracts falling for the 2nd straight month. Well, how's that moving in favor of buyers? Well, that means as a buyer, you have less competition actually making offers that secure contracts. Closed sales, same thing, down 6.1%. Another indication of less competition for you as a home buyer. Average and median price. The average price of what closed in the month of July is down yet again, 3rd straight month of declines, down 1.5%. Median price down 2.7%. That's the 1st straight month, not streaking there yet. And I want to make a caveat here. This is not indicative of values across the board per se, but it does measure the, 3,858 homes that closed in the metro market in the month of July compared to the ones that closed in the month of June. So again, 3 straight months of average price decline in the Denver metro market. I'm going to stop here and just define what I mean by the metro market. We're talking a 7-county area, all property types, single family homes, condos, townhomes, all residential property types. Now, if you want this broken down into your specific town, your neighborhood, even your street level, drop a comment. Happy to make this for you as well, because we do have all the numbers. It's just a matter of putting them together and talking about them. All right, so what's up with the green? What's moving in favor of sellers? Well, new listings down for a 2nd straight month, down by nearly 10% month over month after a 19% decline in June, which brings the 1st decline in inventory in about 6 or 7 months, down nearly 1%, back under 15,000 homes for sale. We'll talk about that and what it looks like year over year. But the last metric to touch on here is what I call the leverage factor if you are a seller. And that's the relationship at the bottom here, this 99.75. That measures close prices to last asking prices and the median. So the median close price is only 0.25% off of the last median ask price in the month of July. Therefore, best way to put this, many of these trends moving in favor of buyers. Buyers do have kind of the upper hand in the market. However, sellers are getting smarter about pricing their homes to actually sell versus sit on the market. Thus, not a huge spread between that last asking price and the closed price. So, what does this look like year over year? Let's talk about that. Well, I got to go this way first. You can see we track a lot of markets here. All right, so same thing, red and green, lots of red, not too much green. We'll start with the green first. That leverage factor is up year over year as well, 99.75, up 1.1%. Now, again, sellers are coming to grips with market conditions in mass and thus pricing their homes accordingly if they actually want to sell them. Now, there's plenty of homes out there that have not sold. Obviously, inventory is a huge topic of conversation when it comes to the real estate market. It is up 31% year over year. So we have, and I'll talk about this when we get to the graphs here in a minute, But we have this kind of haves and have-nots when it comes to home sellers today. The ones that have are getting their homes sold. The ones that have not are slapping unrealistic prices on them and causing inventory to grow. Again, down month over month, but still up a healthy number year over year. Average median days on market, both up significantly year over year. On average, it takes 42% longer to sell a home, I should say on median, in July 2025 compared to July 2024. The average is up 26%. New listings up year over year. I already talked about available homes. New purchase contracts, barely up. What is that? 16 more contracts in July of this year versus last year. But hey, up is up. Closed sales though, down 5% year over year. Well, check this out. Year over year, sold average price, sold median price, both down. Now, it's not too often that we do talk about both of those figures being down year over year. Last month it was a split, month before that both were up, split the month before that. So what we have, and we'll look at it on a long-term graph, are prices that are kind of flopping around. Speaking of long-term graph, let's talk about this for a minute. So we have 4, 5, 6 graphs here, I forget, that depict the market essentially since the start of this new interest rate era, going back to August of 2022. So essentially 3 years worth of data here. And I'm gonna start at the top, average median days on market. Now you could point out a slight trajectory upward in this mountainous view here with clear peaks and valleys. But we talked about where this stands compared to last year. It is up. This one is my favorite. This is the most telling, also possibly the most confusing, but this measures available homes, total inventory in the red, new listings in the blue, and new purchase contracts in the yellow. So what do we have here? We have, at the start of this measure back in August, 3 years ago, everything was pretty well aligned. That's why homes were selling so quickly. There just wasn't enough total inventory out there to satisfy demand. Well, what happens? Purchase contracts go down, new listings go up. It raises the inventory level. And this spread at this month here between the red and the yellow lines, this is where people get caught up. This is where people think that the real estate market is just at a complete zero. But usually it's the sellers and the agents representing those sellers who are priced in la-la land that price will not cause the home to sell. So they're feeling zeros, they're shooting blanks as far as activity on their listing, whereas there's still 4,000 plus homes going to contract virtually every single month since February, basically, March. Now, that's a lot of homes, especially when you draw this back to 2024, even 2023. I don't have the spring of 2022 on here, but 2022 was significantly higher before rates started really doing their thing. So yes, is it slower than previous years in terms of purchase contracts? Yes, it is. But it feels a lot slower to most because of all this stacked up inventory that, virtually, I'll show you here in a second, half of it is unsellable. And we'll just go to that right now. So this is Denver Metro here. Year to date, 46,422 homes have come to market. 25,043 of them have actually sold. Only 54% of homes listed year to date, it's August 13th as I'm recording this, 54% have sold. That means 46% have failed to sell. That's huge. That's a lot of unsold inventory that just sits there, stacks up, or maybe comes off the market. All right, let me go back and talk about this next graph. This is closed sales. Again, peaks and valleys here. Not really any huge trajectory up and down. This might surprise a lot of folks. Yeah, we peaked in 23 at 40, we'll call it 4,600, whereas the peak this year was only 4,300. Not a big difference. Still a lot of homes selling, people. And then finally, second to last, average and median price. Average in the blue, median in the red. Now, if you look at this closely, the overall trajectory is still up. It's just not doing its wild thing like it was in the COVID market, and there's more peaks and valleys to it. Now we're on a downward trajectory. Let's see how long this lasts. And then finally, median sold price to list price ratio. Not much of a conversation here. basically fluctuating between 97% on the low end and about 101% on the high end. And last month was tracking more towards the high end. So again, this is more of a measure of seller realism in terms of getting their asking price correct. Now, how do you use this data? Well, like I said, 7-county area. This is a huge macro level look. Every market's going to behave a little bit differently. So it's best to get with a professional. If you don't have one, we are here to be a resource. Drop a comment, happy to help. And just get with a pro and run this data for your specific scenario. The town you're looking in, the town you might be selling in, neighborhood, street level, what have you. Because this data will really set the tone for how you want to go after this market as a buyer or as a seller. Again, if you don't have a pro, let us know. Sean Reddy, Keller Williams Ready Group, thanks so much for watching, and we will see you next month.